Hi, welcome to my channel, Second PUC Accountancy, Learn, Understand and Excel. Today we are going to see the continuation of the basic concepts under the dissolution of a partnership firm. So in the previous class we had seen what is dissolution of a firm and what is dissolution of partnership. Today under dissolution of a partnership firm, let's see what are the different accounts to be prepared. So under dissolution, at the time of dissolution of a partnership firm, there are three main accounts that has to be prepared. First, we call it as realization account. So we have to prepare realization account, and secondly, we have to prepare partners capital account, and third account will be the bank account. So here we will not prepare the balance sheet as the books of accounts are completely closed and the assets and liabilities are closed. So therefore, there is no balance sheet to be prepared under dissolution of a partnership firm. Now, before we could see the preparation of a realization account, now let's imagine that we are running a business concern, okay, with three partners. There are three partners, partner A, and we have partner B, and we have partner C. Now, as they are running the business, now due to certain circumstances or due to some modes, they want to dissolve the firm. Now, when they want to dissolve the firm, they were running the business with certain assets and liabilities. So let's say, for example, these are the assets they had in the firm. Like, for example, machinery, land and building, furniture, vehicle, debtors, stock, bills receivable. They also had some cash and bank. So with all these assets, they were running the firm. Now, at the time of closure of the business firm or dissolution of a partnership firm, all these assets have to be realized or it has to be sold. Okay, so we are going to see how these assets can be realized or it can be closed by preparing the realization account. On the other hand, they also have certain liabilities. So the liabilities can be sundry creditors, bills payable, bank loan, and if in case the partners have borrowed some amount from a third person, an outsider, say for example D. So D is not a partner of the firm. So D is considered as an external person. So these liabilities under the dissolution of a partnership firm are called as external liabilities. They are the external liabilities. And if in case any one partner has surplus amount and they are willing to lend loan to the firm, say for example C has some excess amount in hand, wants to give loan to the firm. So this also will be a liability for the firm. We call it as C's loan, but this will be an internal liability. So C is the internal partner. He is one among the partners. So the loan which is lent by a partner will be an internal liability. So here C's loan will be internal liability, whereas all these are considered as external liabilities. So these are the liabilities which the firm has to pay off. And then finally, there will be capitals which is contributed by all the three partners. Three partners have contributed capital. So capital partners capital A, B, C is a liability. So under realization account and partners capital account, we are going to see how to treat all these assets and the liabilities to close the books of accounts. So now let's see the format of a realization account with the meaning. So realization account is prepared at the time of dissolution of a partnership firm. So this account is prepared to know the profit made or the loss that is incurred at the time of dissolution of a partnership firm. So here the total of the credit side exceeds the debit side, then it means it is a profit for the firm, and this profit is transferred to the credit side of the partner's capital account. But if the debit side exceeds the credit side, it means there is a loss, and this loss is distributed to the partner's capital on the debit side of the partner's capital account. So we prepare realization account to realize the assets and pay off the liabilities, and to close the assets and liabilities of the firm at the time of dissolution. So this is the main purpose of preparing a realization account. Now let's see the format of the realization account. So we have two sides, debit and credit. So here first we have to bring down from the balance sheet entries, as how I have already shown the assets and the liabilities. On the debit side, first we have to bring down all the assets except the cash or bank. So all the assets we had seen, isn't it? Like we have to bring down machinery, vehicle, plant, buildings, land, debtors, stock. All the assets have to be entered on the debit side to see the value of the assets at the time of the dissolution, so that we can close the assets. So all the assets except cash or bank, we have to record it on the debit side. The second step is that we have to write all the external liabilities on the credit side, excluding the internal liability. So under liabilities we had seen bank loan, creditors, bills payable, and any loan to an outsider will appear on the credit side of the realization account to close the external liabilities. So now once we have taken the assets and the liabilities which are to be closed, now we have to realize the assets. Now when we realize the assets, the entry has to come on the credit side. When we realize the asset, it means we are selling the assets, so we receive cash. So cash comes in through bank. So it will be by bank account. All the assets that are realized will be entered on the credit side if it is realized. At the same time, some assets may be taken over by a partner. So the partner's capital account has to be credited here. So say if a asset is realized, you enter it as by bank, and if an asset is taken over by the partner, we credit the realization account with by partner's capital account. So the assets are now being closed. So the assets are being either sold, or it is either being taken over by the partner. Now similarly, after the assets are being realized, now the liabilities what we have taken here should be paid off. So similarly, the liabilities of the firm, it should be either paid off or it can be taken over by a partner. Now when the liabilities are paid off, cash goes out through bank. So the liability that is paid off will appear on the debit side as to bank account. Similarly, if a liability is taken over by a partner, then it appears under the partner's capital account. We write it as to partner's capital account. That is the liability that is taken over by any partner. So we have closed the liabilities now. Now to do all these process, there will be certain realization or dissolution expenses, or we call it as certain legal expenses which the firm has to pay. So when we pay the legal expenses or the realization expenses, we write it on the debit side as to bank account, that is for the realization expenses that is paid by the firm. Now once all these entries are done, Now we have closed the assets and the liabilities, and we have to find out whether there is any surplus or deficit, or whether there is any profit or loss on the realization of the assets and payment of the liabilities. So we have to find the highest total on of the realization account, and if the debit side is lesser and credit side is more, then it will be the profit. So we write it on the debit side as to profit, which should be transferred to the partner's capital, and this profit is distributed to all the partners in their old profit sharing ratio. And if the debit side is more and the credit side is lesser, it will be loss. So it appears on the credit side as by loss transfer to all the partners, and the loss again should be distributed to all the partners in their profit sharing ratio. So this profit or loss of the realization of assets and liabilities paid off will be transferred to the partner's capital account. So this is how the realization account is prepared. The next account we have to prepare will be the capital account. Now before we could see the partner's capital account, let's see how to pass certain important journal entries with the help of realization account. So first let's see how to transfer the asset to the realization account. Just see the account what we had prepared. How did we transfer the assets from the balance sheet? From the assets, we transfer it on the debit side of the realization account. So here the journal entry will be realization account debit to asset account. Realization account debit to assets account. So any asset that is transferred to the realization account as a first entry. So being assets transferred to realization account. Next, we'll see how to transfer the liabilities to the realization account. So real liabilities we have transferred on the credit side of the realization account. So the entry will be liabilities account debit to realization account. That is being liabilities transferred to realization account. The other entries are here. What is the entry when the asset is being sold or when there is a sale of asset or asset realized? Now here, when the asset is realized, we made an entry on the credit side of the realization account. So which will be bank account debit to realization account. So the entry will be bank account debit to realization account, that is being assets realized or sold. Now similarly, if the liabilities are paid off, liabilities we entered on the debit side of the realization account, which will be realization account debit to bank account, that is being liabilities paid off. So these are the entries for asset that is sold and liabilities that are paid off. The other entries are when the entry has to be passed for legal expenses or realization expenses or dissolution expenses. We made an entry here on the debit side of realization account. So it will be realization account debit to bank account, that is being realization expenses paid off. So this is the journal entry when the realization expenses are paid off by the firm. The next important entry is for when the assets are taken over by the partner. So when assets are taken over, we made an entry on the credit side of the realization account. So the entry will be partner's capital account debit to realization account. That is the assets that are taken over. The next entry will be when the liabilities are taken over by the partner. So when the liabilities are taken over, the entry is made on the debit side it is realization account debit to the partner's capital account. So it is realization account debit to partner's capital account where the liabilities are taken over. So it should be liabilities taken over. So this is the journal entry for when the liabilities are taken over by the partner. The other entries are when how to close the realization account. Now, when we have to close the realization account, the account may have a profit or it can be a loss. So we have to pass journal entry when if it is profit and when if it is loss. So if it is profit, the entry will be realization account debit to the partner's capital account as the profit is transferred to the partner's capital account, being profit transferred to the partner's capital account. If it is loss, it will be partner's capital account debit to the realization account. That is, being loss transferred to all partners' capital account. So these are the entries to be passed when we have to close the realization account. Now, very important entry we are going to see now when there are certain assets that are unrecorded. Now, the assets that are unrecorded, how we are going to treat it in the realization account. Now, these unrecorded assets are the assets which are not recorded in the balance sheet or any books of accounts but identified only at the time of dissolution. So, these assets will not be recorded in any entries, but these assets cannot remain in the business concern. So, we have to either realize it or we have to any partner has to take over. So generally, all the unrecorded assets have to be realized in full. Okay, so therefore the entry will come as bank account debit, like how we have passed for assets realized, bank account debit to realization account. So being unrecorded assets realized or sold. Now, similarly, there can be certain liabilities that are unrecorded but identified at the time of dissolution. So, these unrecorded liabilities also have to be paid off. It will not appear in any other entry, but we will only pay off the liabilities. It cannot be left over. So, when we pay the liabilities, the entry will be realization account debit to bank account. So, this is being unrecorded liabilities paid off. So this is how the liabilities which are unrecorded are to be paid off and the unrecorded assets have to be realized. So these are the important journal entries which can be asked in the exam. So now let us see how to prepare partner's capital account. This is the usual account we had prepared under admission and retirement. So this account is prepared to find out the final settlement of the partners to be made to all the partners at the time of dissolution of a firm. The balance what we get here is transferred to the bank account as it is the final settlement. And this balance can be a debit balance or it can be a credit balance. So this is the format of the partner's capital account. First, we will bring down their old capital from the balance sheet to all the partners. And then if any general reserve is given, we will distribute to all the partners in their profit sharing ratio. And next, any drawings are made by the partners will be debited to the partner's capital account, and any realization profit from the previous account, if profit is derived, the profit will be credited to the partner's capital account, and if there is a loss, loss will be debited to the partner's capital account. And here, if any liabilities are taken over by the partner, which we have written on the debit side of the realization account, will be transferred to the partner's capital account on the credit side as by realization account. It is the liability that is taken over by the partner. Similarly, if asset is taken over by a partner, which we have credited on the realization account, will be written on the debit side of the partner's capital account. That is any asset that is taken over. to that particular partner. Any partner who has taken it will be on the debit side as to realization account. Now, with this, we have to find out the total. The total will be calculated and then find the balance. The highest balance, it can be on the debit side. So this will be the final settlement which will be transferred to the bank account, to bank account to the partners of the firm. That is the final settlement which will be transferred to the bank account. If it is on the credit side, again it will be written as by bank account, which is the additional capital. If there is any shortage, the partners have to bring in the additional capital to balance their payments. So therefore it will be by bank account as a final settlement which has to be made by the partners, which also will be transferred to the bank account. So this is the format of partners capital account. Now, once we have prepared partners capital account, next we have to move on to the bank account, the final account that we have to be prepared. It is to prepare to record the cash or bank receipts or payments of the firm on dissolution. So all bank entries in the realization account and the partners capital account are to be transferred to the bank account. So bank account, we record all the receipts and the payments made in the firm at the time of dissolution. So this is the format of the bank account. So in the bank account, first and foremost, we have to bring down the opening balance from the balance sheet. When a bank balance is given, we will write it on the debit side as to balance brought down. That is the balance sheet amount brought down as an opening balance of the bank account. If in the balance sheet there is cash given, then the cash also have to be transferred to the bank. So you have to bring it to the bank account on the debit side as to cash. That is the cash balance from the balance sheet. Now in the bank account, we now have to record all the realization of assets and payment of liabilities and the settlement that is made to the partners through bank. So when we realize the assets, the bank comes in. So it is a receipt of bank. So we write it on the debit side as to realization account. That is the assets that are being sold. So we write it on the debit side of the bank account as it is the receipts. Now the payments have to be recorded on the credit side. So here by realization account, the liabilities that are paid off, the total amount is entered on the credit side of the bank account. Similarly, when we pay certain expenses in the realization account, we have to transfer it to the bank account as by realization account. That is the realization expenses that are paid. Now next we have to enter the loan, that is the internal loan or the internal liability which is being taken from the partner. So by partner's loan account is the third settlement in the order, so which has to be recorded only in the bank account if any loan is taken from the partner. As we have seen in the example, a loan which is given by partner C, since he is an internal person, so he has to be recorded in the bank account on the credit side only. So as by partner's loan account on the credit side of bank account. Now finally in the order of settlement is the partner's capitals. So the capital account balance will be brought down to the bank account when it has been paid finally to the partners as by partner's account. So the balancing figure, what we have derived in the partner's capital account, if the balance is on the debit side, we bring it on the credit side and write the total amount on the credit side. Similarly, if it is the balance on the credit side, we bring it on the debit side of bank account. Now finally, we have to take the total of the bank account. The receipts and the payments should match with each other. So it should be the same total. So it should be the same total on both the sides. So with this, the accounts are being completely closed on the dissolution of a partnership firm. Kindly go through all these formats carefully. In the next video, we will see the sums under the dissolution of a partnership firm. Thank you.